If you're approaching retirement and you are one of the fortunate ones who has a pension, first off, congratulations. Pensions are becoming more of a rare item that people get for their retirement planning. And a lot of people going into retirement underestimate the power a pension can have on their retirement. They maybe think that they just have to choose between a lump sum and a monthly payment, and then all they have to do is just make a wise decision between those two things. But in reality, there are a lot of decisions to be had around your pension, and there are a lot of different options. And unless you take the time to consider these options, you can negatively affect your retirement for many years to come, maybe costing you tens of thousands of dollars. And don't get me wrong, a pension really is a huge blessing, and ability to have a guaranteed source of income is no small thing and can give you a really solid foundation for your retirement planning. But unless you coordinate that with the rest of your retirement assets and your goals, you can cause as many problems as that pension can help mitigate. In this video, I intend to walk you through everything you need to know in order to make an educated decision around your pension. I mean, you've worked hard your whole life to earn this benefit, and I want to help you make sure that you make the most of it. Like I mentioned briefly a second ago, typically your options with a pension within the plan itself are to take out a lump sum or to take some sort of monthly payment. And that monthly payment can either be single life, so it's guaranteed for the entirety of your life, but if, say, something were to happen to you, God forbid, then that payment would not go to your spouse. And then there are different variations of a joint payout. You could do 100% joint payout where they would reduce the amount you receive per month off of that single life amount. And then if it's 100% joint payout, that would reduce that monthly payment the most. But when you are to pass, 100% of that modified benefit amount would go to your spouse. And then there are different variations of that, like 75%, 50%. And with the 75 and the 50%, your initial payout would be a little bit higher. But once you go to pass, less of the benefit goes to your spouse. And in my years so far of helping people decide between should they take the lump sum, should they take the pension, and then doing research, some people are beating the drum that the lump sum always makes sense, or always taking that monthly payout makes sense. And truth be told, not a helpful answer, but it really does just depend on your unique situation as far as which option will make the most sense for you. And that's the thing here, is you don't want to follow any sort of rules of thumb when it comes to your pension. And generally with advisors, that's a lot of just what they are going to give you. They may not have as much experience working with pensions, so they may just be giving you generic advice around how to be utilizing that pension. When in reality, this pension benefit really needs to be coordinated with all the other aspects of your plan, such as your Social Security. How will these benefits affect your IRMA calculation down the road? How does taking this pension benefit affect maybe your ability to do Roth conversions down the road strategically to pay less in taxes in the long run? These are things you need to be considering when taking that pension benefit, not just what is the most that I can get per month, or maybe I can take the lump sum and do better in the market. Either of those things may be true, and you may be optimizing that singular variable, but retirement isn't relying upon this singular variable. It takes into account your whole picture. So you have to make sure that your pension fits into the whole picture. Some things to consider when thinking about taking the lump sum or the monthly benefit amount is that if you already have a large nest egg, so you have a lot of money set aside for retirement in invested assets in various different types of investment accounts, your 401k or IRA, your Roth IRA, brokerage account, you're set up really well. And you don't need to worry about if you have enough for retirement or not. You have plenty, and I mean really plenty. If that's the case, then you could afford to take more risk taking that lump sum and it being invested to maybe have some higher appreciation down the road. You can have that account be invested in a aggressive diversified portfolio and take advantage of being able to take a bit more risk. And many will say, well, I think I can just take that lump sum and maybe have it invested in the S&P 500 and have that grow more in the long term. And there's a chance that that could be true. But two things there is, one, that is not guaranteed. Yes, the S&P 500 has a great long-term track record, and it has gone up on average of over 10% per year, but that's an average. And that's not what every year looks like. Some years look like the early 70s when the market went down and inflation was rampant. Some years look like the dot-com burst. Some years look like 08, 09. There are many instances where your portfolio may drop a lot. And that brings me to my second point here is you have to know yourself. You have to know, do you have the discipline? Do you have the emotional capacity to handle those downturns? Because if that's not the case, then you can actually end up doing yourself a lot more harm than good if you were to take that lump sum, have it be invested, and then 08, 09 comes and you panic out of the market. You end up really harming yourself and your long-term success for retirement by doing something like that. So these are things you have to consider if you wanted to maybe consider taking that lump sum. And like I said earlier, that's not guaranteed, whereas that monthly pension payment is guaranteed. And that's actually a big thing to consider. If you are going to look and take that monthly payment, you have to see if your pension is going to be covered by the Pension Benefit Guaranteed Corporation, the PBGC. As long as your pension is covered by that government organization, then your pension is guaranteed up to a certain amount. For 2025, that amount is just over $7,400 per month. So that's a big deal to have that guaranteed payment. Not only practically, say that guaranteed amount can cover your base expenses, so you know that you will always at least have a roof over your head, food to eat, things like that. You can have that peace of mind. But also, what's that peace of mind is having a guaranteed source of income does just give you a full reassurance. It helps you to just kind of take a weight off and knowing that you're just going to be okay. That emotional benefit really can't be underestimated in all of this decision making. Hey guys, if we haven't gotten to meet yet, my name is Dylan Martin, certified financial planner with Stewardship Investments, and we work with Christian families to help them retire well and to be good stewards. All right, let's jump back in. The planning done with your retirement is more than just optimizing the numbers. Yes, that is a really fun part of my job and something that it does make a really big difference in your retirement planning, but really the reason you would be looking to do some planning, or the reason I'm working with the families that I'm working with, is yes, we're optimizing the numbers, but we're making sure everything looks good so that you can live the life you want to live. And a big piece to making sure that you can live the life that you really want to be living is there's this emotional piece, making sure you have the peace of mind to do so. Some further risks that I want to talk to with the monthly payout, a big risk you need to consider is, does that monthly benefit have a cost of living adjustment? And what is that cost of living adjustment? A cost of living adjustment is what would allow that benefit to partially or fully keep up with inflation. So your benefit would get adjusted by a couple percentage points per year to help it grow alongside with inflation. So if it doesn't have that cost of living adjustment, or it's also sometimes called just a COLA adjustment, then you would really quickly begin to lose your purchasing power. Or if that cost of living adjustment is not quite high enough, maybe not keeping up with what inflation actually is, and this is a big deal, especially here in the last couple of years when inflation has increased a bit, is that over time, if there is a difference between what your cost of living adjustment is and what inflation actually is, that will, yes, take a bit more time, but that will still eat at your purchasing power. So that's something really to consider. If your pension doesn't have any sort of COLA adjustment, then maybe it does make sense to take that lump sum, or that's just something you need to be accounting for in your planning. Having that guaranteed source of income doesn't necessarily mean that you don't need to be planning going forward. It just means that that planning needs to look different than if you didn't have that pension. And needing to consider these different aspects, like, does it have the cost of living adjustment? Is it guaranteed? What do these different factors look like? So those are the two options that people are typically looking at and weighing when they are looking at their options with their pension, taking that lump sum, taking the monthly benefit, how much of a monthly benefit as far as single life, joint life, what that looks like. And those in and of themselves, yes, are very important questions and considerations to be making, but it's good to know that you do also have options outside of just those two as well. For example, one option is that you can maybe even utilize life insurance. So let's say that you're actually going to take that single life benefit, so you get that higher payout than if you were going to take the 100% joint life payout that was going to take care of you and your spouse once something, or if something happens to you. Well, another way to accomplish that is typically the differential between what that single life payout is and that 100% joint life payout is actually pretty large. So sometimes it can make sense to actually just go out and purchase an outside life insurance policy that can cover your spouse when something happens to you. So this is actually something to consider, because the math there can actually work out for some people with taking the single life payout, buying a life insurance policy instead of taking that 100% joint life payout. Something to consider. And then another option, and this is something we actually helped a client with recently, is you can actually just go out and buy a private annuity. One big hesitation that families will have when they have a pension is that, well, if I take these monthly payouts and something happens to me and my spouse, well, that company gets to keep the rest of that lump sum amount. That doesn't go to my heirs, my kids. And some people have a hard time with that reality. Well, if you go out and buy a private annuity, if you find the right fit, you can actually have the best of both worlds there. You can find a joint annuity, get a payout. Typically, that's fairly similar, if not better, to the 100% joint payout that you would be getting from the pension. And then you would also have that death benefit. So if something were to happen to you and your spouse several years down the road, your heirs would get the rest of what's left in that annuity policy. So it actually helps us solve that big issue that people typically have with taking that monthly pension benefit of, well, none of that money will go to my heirs. Another thing to consider here when planning with your pension, and this goes back to something that I was saying before, is that your retirement planning is more than just optimizing the numbers. It's really just all about optimizing your life and making sure that everything fits well together so that you can optimize your life. Well, a big piece there is with the pension is that your pension can be a really great bridge if you're retiring earlier to get you to 59 and a half. So that pension can be a great asset to help you retire early. Yeah, I'm sure if you waited, that pension benefit would increase, but what's the point of that if you could retire now and enjoy those years of traveling and doing the various things you want to be doing with your family? Sure, you can maybe get at your IRA money before 59 and a half, or there are ways to bridge that gap, but there are some added complexities there. And if you have that pension, I mean, that's just a great way to make that bridge. And then if you are looking to take that monthly income from the pension, there are some things to consider to make sure that that payment's going to work well with the rest of your plan to really optimize your retirement, optimize your life. First thing there is taking that monthly benefit is going to raise your taxable income for the rest of your life. So you may have less opportunities to do some strategic Roth conversions down the road to mitigate that tax bill, mitigate those required minimum distributions. So that's just something to consider as far as when and how you may take that monthly benefit. Also, you need to make sure that your monthly benefit is going to coordinate with your Social Security payments. Those are not just two isolated variables that you're wanting to optimize separately. You want to make sure they're going to work well together. Let's walk through an example here to help illustrate my point. You and your wife, you're both 62. You have a pension. Your pension is going to pay you $2,000 a month, and then your spouse has a Social Security benefit that they are able to elect at 62. So they go ahead and elect that benefit. You have that pension going at 62. You have two sources of guaranteed income, but then that also allows you to postpone needing to take your Social Security benefit if you're the spouse with the pension. So you could wait until age 70 to collect your benefit. And then what that does is now you have that other guaranteed source of income that you've just let compound over those 8 years. And then if that benefit is higher than your spouse's, you've also just given your spouse a higher survival benefit down the road as well. Not only have you collectively given yourselves a greater overall bucket of guaranteed sources of income, but you've also set your spouse up well in the future to receive your increased spousal benefit as well. Another thing to be aware of is that your IRMA calculations, so these are the calculations based on your income that are going to dictate what your Medicare premiums are going to be. And there's a 2-year look back on those calculations. So if you're going to be taking a monthly pension payout, then this is just something to be aware of, that is going to most likely increase your IRMA calculation and then increase your Medicare premiums. Another consideration to take, and I don't want to beat a dead horse here, but your pension, like we've said, is not an isolated variable. It works with your plan. So it's helpful to think about, if you're taking that monthly pension payment, then that can sort of serve as your conservative or fixed income portion of your portfolio. You have that guaranteed source of income coming in, covering your basic expenses, that's coming in every month. Then you could maybe afford to take a little bit more risk with the rest of your invested assets in your retirement portfolios because you have this portion that's serving as your conservative and fixed income portion of your portfolio. So consider that with the overall plan that you have so that you can be invested appropriately considering having this pension in your plan as well. So these different decisions with your pension, I mean, they're more often than not irrevocable. So you really just want to make sure that you are educated on what all of your options are and that you're making the best decision to equip your family to, of course, like I've said, just live the life you want to live, but then to also be good stewards. So if you need help navigating your different options, my team has helped hundreds of families navigate the different options around their pensions. And we'd be happy to walk through your pension options with you to make sure that you're setting your family up well. If you want to click the link below in our description, you'll be able to schedule a free retirement planning meeting with myself and we can walk through those options. Or we also have the option, if you just want to maybe see if you're on track for retirement, we also have a link below to our website where you can take a quick 2-minute quiz, see if you're on track for retirement. You'll get a personalized response there. And as always, thanks for watching. Hope to see you guys next week. Take care.